Markets around the world are crashing. The reason Israel just struck Iran, and it's having ripple effects through everything. But did Wall Street know, and have we just seen some massive dark pool activity? In today's video, we'll take a look at the biggest trades that just occurred, some of them being the largest ever on certain exchange traded funds, and of course the movement that we spotted about a week and a half ago. Oil seems to have been leading into this, but yeah, could it get a lot worse? JP Morgan tends to think so. What else is happening as we see hedges now starting to go ballistic? Will we see new all-time highs for gold? And the US dollar totally capitulates. Guys, we've got a lot to discuss. This is a crazy 2025, and that means we need to talk about stocks, commodities, and cryptos as we break it all down together for investors and traders like you and I. Let's have a look right now. Well, welcome back everybody to the Daily Show, and of course this chart really does not show exactly what just happened. My name's Tom, and in today's video we'll take a look at the macro, the data, and the key flows, but of course today is realistically about this news coming out of the Middle East. Just before we jump into the key stories, I just want to quickly give a shout out to anyone here that is able to attend our 2nd of July Melbourne trading event. Yes, it's totally free, drinks provided, links in the description down below. It's always great to see you guys, so we love doing these events, and if you come out, then we can do more. We're also sharing something in that event that we've never done so on YouTube, so I think you'll get a lot of value if you're able to attend. Now let's talk about Netanyahu, because of course he's now said that strikes against Iran will last until the threat is removed. And this is of course causing a lot of panic in markets around the world, as we just saw a massive thing happen. And obviously now we're starting to see the potential ramifications of what this could do. JP Morgan is now warning that oil could spike to $130 a barrel if Iran conflicts escalate. That would impact inflation on the way up, rates would obviously go ballistic, and global growth would slow. Now, of course, this is a pretty dramatic number, and obviously we're not anywhere near that, so you don't necessarily want to bank on those things. But clearly this one has people worried, or at least the news cycles and people making big comments come out. And it looks like there is a little bit of money where the mouth is on this statement, because we've seen some massive transactions all happening near these highs. Now everything was looking positive gamma, and then we started to see dark pool transactions near the close, and then of course we have now seen some pretty big ramifications of the markets falling. The number 4 and 5th largest trades since inception for VOO. Now, if you're not aware, VOO is a massive S&P 500 fund, and we see massive trades there. We also have 3 clusters on SPLG, which is another massive S&P 500 fund, all near these highs. And then we get another one near the close of today. So this has all happened over the last 48 hours. IVV, another big trade here happening throughout the session, and of course has been synonymous with temporary peaks. Now, it's not to say that this is the beginning of the end and the market's going to fall, and you'll see why when we take a look at hedge funds and how absolutely far behind they are in this market rally. But this could create a more significant dip, and of course we have been starting to see a lot of money sitting on the sides potentially wanting to go in. Take a look here at the total market money funds and how high this is. 2025, we've never been higher. The most amount of money sitting on the sidelines in money market funds. And that often does mean that markets will continue to go up, and it also means that there is a decent amount of demand, but there's no doubt that in the world of 2025, there have never been really more geopolitical tensions over the last couple of years. Let's have a look at the US fundamental long-short ratio from hedge funds. You can see that they have been purchasing recently and trying to play catch up with retail, but they're super far behind. Hedge funds been underperforming URI for quite a while now, and actually they need to find dips so that they can get back into these markets. Even CTAs have been underpricing themselves in this market recently, and while they did buy the dip really quickly, they've been slow now to get above this price here. And you can see that it's actually even dipping down in terms of CTA momentum is starting to stall, and according to the latest Goldman Sachs data that we shared in the last video, that's leading into basically most case scenarios. This is basically the different concepts that they believe could happen, either being minimal increase, which of course would probably be a 6100, 6125 market, but in 2 of the big cases, actually quite a lot of down tape. So this basically means that CTAs are set predominantly to sell at these levels than to buy, even though they're behind, although hedge fund managers will be trying to get back in, you'd have to think. Now, what is all of this doing? Well, if you've been watching the channel for a long time, you would know that about 2.5 years ago, we went super bullish on gold. We've obviously been super bullish on both Bitcoin and silver more recently because it seems to be a transaction that's happening. But gold is now the second most important reserve asset for central banks. It has overtaken the euro for the first time in a while, and we now see more holding of gold than anything else other than the US dollar. So that's, of course, been a big movement. What about the US-China trade deal? Well, of course, this is still being fleshed out, but basically the latest trade deal is more of the same in many ways. Obviously, the rare earth shipments are now recommencing. If you're not aware of this, yeah, there's quite a lot of risk in quite a few rare earth minerals that are needed for fighter jets and other things. And this continues to be a big problem specifically for the US and a lot of the West because they just don't have the mines for these particular metals, and China does. And of course, you can see here that there are some costs involved in this tariff rollback. Generally speaking, this is still just a short-term fix. We're still getting information on it, and the markets might take it in their stride for now. But yeah, if we lose this, of course, that will be a big deal. Now, what this is leading into is something interesting. We saw in our previous two videos, we talked about Wayne Whaley's data, and that was around the idea that June traditionally sees a downward tick in the yields. And we've actually seen that. Now, this whole situation in the Middle East may change this, but treasuries have been setting up for an inverse head and shoulders. And we actually saw, before all of this news, treasuries extending gains after a solid 22 billion sale of the 30-year debt. So remember, only a few weeks ago, we weren't seeing very good sales of the debt in the US. Now, all of a sudden, it was pretty good. And predominantly, it's even possible, actually, with this stuff that's going on in the Middle East, that you may even see people wanting to buy even more treasuries, as that's often been considered a safe haven. Will it be this time? We don't know necessarily. Now, I've mentioned that this is an incredible chart. This is global equities total market cap versus the global GDP. Now, if you're familiar with Warren Buffett, which I would say we all are, Warren Buffett obviously was first to coin a concept of using the US GDP and then putting the US overall total market cap versus it. And it was an amazing indicator. Of course, it was called the Warren Buffett indicator. Well, I think that we're at those critical times where you've got to question, why is he out of the market? Why is he reducing the position? Why is Jamie Dimon also reducing his position? This has been happening in 2025. And remember, it looks like there's a bit of smart money that's starting to put a little bit of cash aside. I would guess that they believe that we're starting to head into a later cycle. We've been running since global financial crisis, and we're starting to get on those timings. And there are, of course, a lot of implications of all of this, but I would stress that I would always keep this one in the back of your mind, as although it's not a timing tool, it is a tool to say, well, when you get past that 100% plus, you're in a very, very unique experience. And as, of course, tariffs stay for longer, that usually leads into a decline ultimately in markets. At the moment, though, of course, we're still looking at dips being purchased just because timing is, of course, everything. Now, the Russell 2000 broke out last week and it's had a couple of good sessions. Of course, it may drop off a little bit here based on this news, and we'll see how that plays into the close in our weekend video, so make sure to subscribe for that. But the Russell 2000 versus S&P, this is actually what happened around the tech bubble boom. And of course, we actually saw before the bust of the tech bubble a little bit of an uptick in the Russell, and that's often, again, another late cycle market read. Junes also don't tend to be the peak of markets over the last 40 plus years. So what that basically is telling us that we really don't usually see June give us the absolute high. It's never happened. It's not that it's not possible, but it's never happened. Traditionally, January and December are the months of the year, and of course the back end of this year would be something you want to look at, of where we see highs. And this means that there is a very low likelihood that June is the actual absolute high of the markets before falling off, but it's still possible. As we mentioned, Wayne Whaley's data shows that the 30-year bond yield performance over June usually is towards the downside in terms of yield, so that often does push up treasuries, and that's been a pretty good study, and we thank him, of course, for that information. It's always cool to see Wayne's results, and he does some great work, so I encourage you to follow him on X if you haven't already. Monthly average returns, when this type of thing happens, when the US dollar obviously goes down, and that usually happens because we see yields also going down, then we see US small caps do well and international markets do well. Now, of course, if the Middle East tensions continue to rise up and we still see this escalating throughout the weekend and next week, that can temporarily increase the US dollar as people move towards safe havens, traditionally gold, traditionally potentially a little bit of silver and US dollars. But we don't know yet whether that's going to happen. Of course, we don't know what the retaliation is going to look like. We have no idea how this is going to play. It's still breaking news at the time of this recording, and I still have limited information. Maybe you'll have more over the next couple of hours. Year to date, gold, silver, Bitcoin, the holy trinity of kind of the geopolitical hedges. Gold, silver doing very well right now. Bitcoin back to a very interesting level. We'll discuss in just a few moments. But yeah, again, have they been performing well? Yes. Have they been beating the market? In many ways, yes. And we've seen, of course, over the last couple of weeks, our thought process of the last 2 months, which has been silver would play catch up to gold. And I know a lot of you guys say, well, we should be talking more about single stocks and all these things, but it's just the time that we're in the cycle right now. You know, silver and gold, there's been a reason I focused on it here on the channel. And again, with Bitcoin, it's because that they were statistically more likely. And one of the reasons for that is you always do follow the big money. And of course, we know that China's been buying. We know Russia's been buying. We know India's been buying. We know other central banks around the world have been purchasing, and they've been shadow purchasing. According to Goldman Sachs, China's been purchasing even more gold than we originally expected. And that helps to boost the price. And of course, with geopolitical tensions not de-escalating, but instead escalating, it also helps that kind of case scenario of gold being a decent hedge at this stage. Gold to silver ratio, obviously, for any new people that have not seen this chart before, basically, when you hit this 100 level between gold to silver ratio, you want to start looking at silver pretty closely, and we saw that, of course, just a little while ago. Now, where are we right now? Well, we've speculated that we're probably in this or this cycle here. And in both cases, we ended up making an all-time high. You'll note, though, that we do see a little bit of a sell-off around this point. Now, we're not quite at the all-time high, so obviously we've seen the sell-off a little bit earlier, but there is a case to be said that we should go and fill some gaps to the downside, and it's possible that if this Middle East stuff continues to, of course, escalate throughout the weekend, that we could be seeing a bit of risk off. Also, remember that we're going into Friday, which means that people will be scared to hold risk on the weekend, and that often means that we do get these sells Thursday more so, and sometimes even Friday can pick up a little, but ultimately people will want risk off into this weekend, I would think. Now, S&P 500 looked like a good close, 60-45, positive gamma, everything was looking pretty good. But then, of course, we have seen what the news has done, and this is going to create a gap down, you would have to think, probably opening somewhere, or at least what we just did tap, which was about that 59.30 area. And you'll notice that is the daily 20 moving average. And if you have a look through, the daily 20 moving average has been struck once, twice, and found buyers. So for the bulls anyway, this is going to be a super level to be looking at. It also will be, as you know, a gap fill. We closed here, we opened up here. So this is actually a gap fill level. So you've got a bit of confluence at this zone, and you can see that here on the futures action. I've also put on some VWAP. You'll notice again, we just tapped that. This is traditionally where a day trader or a scalper or something will try to buy dips off these types of levels. Of course, the options high-low levels are completely out today. But we have actually also printed a pretty extreme high. So what that basically means, here's an extreme low, here's an extreme high, here's an extreme high again. You get a pullback in time, extreme high pullback, extreme high pullback, pullback in time, pullback in time. There are a lot of reasons why you might think that we're in a pullback in time. That is sideways or down. The last 7 of these have been that type of thing. So I wouldn't be getting FOMO that this market's going to run off without you in terms of bullishness. We knew that 6100, 6125, which were the previous highs, was that likely a kind of topping point for at least some pullback. This is pretty good, day trader zone. But if we drop this area, then we, kind of instantly go to 5900. And of course, then the 5800 will be the next level. And a lot of people will argue for the 50. And that's the 50 daily. And the reason is because we are around 4% away from that. Now, if you go back through history, whenever we've been, at least for the last year and a bit, not for further, it doesn't work like back that far, but if you actually look when we've been that far away, about 4-ish% each time, 4 to 5%, we've often pulled back to the 50. So a lot of people are going to be looking for the 50. Now, of course, there are deeper pullbacks, but traditionally, we're going to be looking for the 50. If you take from April 24 all the way through, the 50's been pretty exceptional at getting these levels. And of course, that's the one that I've seen floating around a little bit in terms of an idea. So let's now take a look at the overall expirations. And as you guys can see here, it's still a dominated call market. But if we do go to the downside, you may notice that for some reason, the 16th, so this is of course before the close, I think before the news as well, we have a massive amount of 5,900 puts. So there's this extreme amount of puts here on the 16th 0DTEs, and we do have a decent amount of puts that have come in around 5,970, which will now be, of course, in the money. So we are now in negative gamma as we open throughout the session. Around 5,930 though, 5,900, you can clearly see that there is some form of put support. So yes, everyone's going to be panicking, everyone's going to be freaking out, but ultimately there are a lot of puts at that zone. And if you're a day trader, if you're a scalper, you'll want to be looking quite closely at that. In terms of the call side, we already knew that 60.50 and 6100 were the major call levels. And funnily enough, we got right up to that 60.50 zone just before the close. Then we got the news of course, this strike that just happened. When we go over to Tesla, Tesla's been doing exactly what you would think it would be doing. We mentioned in our last video, 325, 330 was going to be a call wall range. We hit into that area. We've seen a little bit of selling. I probably wouldn't be looking too much at Tesla until it gets back down into at least the 300, if not the 275, 280 area, because that's of course between 300 and 275 has been seeing buy demand. Whereas, the 330s, that's kind of like the dead cat bounce or the little bit of the relief rally. Nvidia, similar, 145, 150. We need to get through 150 to really get these calls going on. It's probably not going to happen over the next 24 hours based on the information that we now have. But these are the key call wall levels. So these are, of course, resistance, and there have been some large transactions. I'm looking for us. We're going to hunt them out, but I am hunting for a couple of large dark pools because I've heard that there are a few large transactions going through on Nvidia, but I don't have that to share with us today, unfortunately. Let's now take a look at US 30Y. So 30Y is declining, which is in line with Wayne's study. And you can see here that Treasuries is bouncing up. Now, this actually created an inverse head and shoulders. And a lot of you have said, Tom, why aren't you talking about Treasuries? Everyone's talking about Treasuries. Everyone's doing this and that. Well, it's because it didn't really activate anything. So what was the point of talking about something that didn't have anything on it? Now it has got that inverse head and shoulders. It has broken through the bull zone that we've mentioned before. And of course, if you're looking at Treasuries and you're looking at buying them, then I'm not going to say it's not a bad price down here. But remember, as we state on this channel all the time, Treasuries aren't really a trade most of the time. They're more of an investment vehicle or a hedge vehicle when they're necessarily used so. So what I noticed on the inverse head and shoulders pattern is that it is completing at the next resistance, which is $90. So of course, if you are long Treasuries, I could see it getting up to that point. I don't think that yields are going to spike, at least initially, off this news. They're actually down at the time of this recording, another 0.6, 0.7 on the yield. So yeah, we are seeing a little bit of a decline there. What about the BOFA in terms of overall high yields? Well, of course, they're not showing anything yet. I would suspect, though, that we will see generally bond markets actually start to spike, as in risk spike, not so much that we'll see a massive sell-off across bonds. Obviously, Treasuries are going to go up, corp bonds may go down, but I think there's going to be a risk spike here. We'll update on the weekend. We don't have that data yet. It happened after hours. US dollar continues to tank, did pick up a little bit, as we traditionally have seen the US dollar strengthen off this type of escalation in the Middle East, but it's looking bad for the weekly. If it closes down in these levels and closes underneath 98.31, as we've mentioned several times, next stop could be 95.50, and that's that demand over here on the left-hand side. So it's really not looking very strong at all. We'll see the closure after all this stuff goes through. Now, gold, we've suspected it's long, and of course, it's doing well right now. Silver starting to play catch up as well. Two of the favorite metals, two of the three pillars, doing very nicely. Bitcoin not so well. We'll talk about that in a moment, but gold absolutely blitzing. 34.26. This is the traditional escalation hedge, and people are buying it. And of course, if we get a big strong weekly close here, then we're probably going all-time high. And we've had a target for the 3,600. We had it for October, but again, as I keep saying, gold keeps giving us pretty good reads. I mean, it looked kind of negative there for a little bit, but then it turned, and we just knew it was most likely going to be long. Technicals showed that, and I think this year's been incredibly good for metals. They haven't been affected by the tariffs as much. We have seen incredible technicals, and we're seeing them hold up. So if you like the videos, if you do like this stuff, please do share it. Please do give it a thumbs up. I think we've been all doing an amazing job, and I know a lot of you have been enjoying these moves because they're less stress than sometimes the aftermarket tweets and the stuff that's been going on the weekends and all sorts of things. So this is a massive close if it does happen. Another big one there for gold. Silver playing catch up as well. Actually looks like kind of like a little flaggy style pattern here on the daily. You can see some consolidation. In our private group, we were talking about this. Man, if you got that level yesterday, this is actually an exceptionally good zone. You'd be pretty happy. And this break here of the high is theoretically a strong sign for the bulls. So again, silver starting to play catch up to gold. And yeah, it's moving. And next stop, could it be 40? Could it be 42, 43? That's kind of the area that we speculate on, at least from the technicals. Again, nothing's guaranteed, guys. You've got to put in the risk management procedures for yourself. And that is, something that's been happening though. US oil, we suspected it would do well, regardless of anything. We thought it was going to go to around 71.50, 72, but it has blitzed that. I mean, are we going to 79? I know JP Diamond thinks, or maybe not JP Diamond, but someone at JP Morgan thinks 130 a barrel. That would be wild. That would be really wild. So this will be an evolving situation. I'm not ready to even say that kind of crazy number. To me, it's crazy. But at the same time, anything can happen. I think this was just an example, though, of, if you've been watching the channel, I haven't liked oil. I've thought it was really terrible. And there was a lot of geopolitical risk. But about a week and a half ago, there was replication. And as we often say, patience, react, don't predict. You might think it's a prediction to go up here, but it's actually a reaction off the market. And it's replicable. And that one's actually in our day trading masterclass. It is a replicable system that is there. It is a fully replicable pattern that did happen there. And at this stage, it could still go to 79. I mean, I personally think it's hit the level that I liked. But hey, this stuff could get wild. Tesla, as we mentioned, 300, 275, the box down here. This is a rejection at the end of the day, which suggests further selling should come through. And at this stage, that does seem to be what's going on, as the hype for the taxi unveil or the self-drive, or I saw the self-drive video. Did anyone else see that? I don't even know what that was about. It was just like 30 seconds. It was just some dude videotaping it on the side of the road. And I don't know what was going on. But anyway, that was there, and that hype's kind of dying off a little bit at this stage. Semiconductors are at that critical res for the week, so I guess it makes sense that they might weaken a little bit. Maybe the daily 20 could be an interesting level to look at here. But semis have been leading this market, and that's, again, a good sign that there is demand here and that maybe hedge funds and others will need to get involved in it. RK still holding after the week that it's had. It's obviously going to fall off a little bit here if we keep seeing this sell-off occur. But in general, hypergrowth, risk on, that has still been the story of the US market. Intel, you can see he's back down to those levels as well. A few people were talking about this, but same thing here for any of these semis and stuff. We've just seen a lot of movements in the semis, and we've seen a lot of strength here in uranium and some of these alts. And this is the type of thing that we saw in 2021. So hypergrowth and risk on does still seem to be the game. But at the same time, geopolitical tensions will take over each time that happens and make the markets ebb and flow. So I feel like there's a lot of pent-up demand, but the key will be the levels. And at the moment, we're on that first temp level for the S&P. HSI, that's the Chinese market. Yeah, it's still chugging along in terms of a series of higher highs and higher lows. US 2K gave the shooting star, and now it is obviously come back down to this heavy trade area of the inverse head and shoulders. May go as low as something like a 2060. This is actually a support here right now where we find ourselves at 2090. So again, really just synergizing with the S&P and the NASDAQ. And as you can see here, the NASDAQ hit a pretty critical level around that daily, around the previous support, around the VWAP, all of these levels. I can see why it's bouncing here off that initial shock of the news. And as that market, as all the information obviously comes out, I'm sure that we'll see some stabilization and structure appear. Now, Bitcoin was hit the hardest, so I thought I'd do a bit of analysis here and leave it on the chart. A lot of you guys don't think I use these techniques. I absolutely do. I just don't leave them there because it creates this, which, probably to somebody that doesn't know what they're looking at would be like, that is madness. Your chart looks like, a dog's breakfast or something. It's a terrible looking chart. But what we're actually at is we're at the most traded base level here for Bitcoin. We're at a pretty important level, which is the daily 50, which obviously we've seen bounce over here, and we've seen it respected. The most important thing is see how It may look like the daily 20, but it's actually the daily 50 has been respected. So I treat that as a pretty important moving average. We've hit down to that. We've obviously come back also past the 61.8 fib, which is the golden pocket, in this case with the Gann number. But this is a pretty important level. I want to see a bounce here though first. So I do feel bullish on Bitcoin. I do want to see though that this actually holds the level. So this is one of those ones where it's the patience react. Okay, some people will scale in, but predominantly if I was scaling, I would have scaled around this level, even though it's lower now, and I would be waiting for structure to improve. It's the same thing on Ethereum. We're back at the most traded zone, back at the little support. We've broken out. The question now will be to a lot of people, is this a Wyckoff and is this a UTAD? Because this is a UT, this is a buying climax. Boy, oh boy, is this going to be a massive rug pull. We're going to know very soon whether it is or not. And buyers will have to commence back into the crypto markets pretty quickly. So yeah, a lot going on here. Some actually exceptionally good technical levels starting to appear. So very interested on Ethereum, very interested on Bitcoin over the next 24 hours, 48 hours and the weekend. So what about the inflation? Well, the PPI came in pretty good, 0.1%, expected 0.3, 0.2 on the normal. So the core was only 0.1. That's kind of interesting. I thought it would be higher. Most of you probably thought that as well. But the markets are dealing with the tariff stuff. The markets are now dealing with the Middle East stuff. Prelim UOM is on Friday. That will be important to also pay some attention to. It's at 10 a.m. New York time. But guys, this is now all about escalation. If escalation continues, you have to expect risk off. 2025, it's one of those years. Remember, it is not a year synonymous with exceptional gains. It is a year synonymous with chop. And we've shown that chart so many times here on the channel this year. We've all looked at it together. It's up, down, up, down, up, down. A lot of chop, a lot of that type of stuff going on. So good if you like chop, bad if you want to see sustained trends. So we will see how this ends up. And of course, join us for the weekend video. Quick reminder as well, follow us over on X for some of these charts. We did share quite a few of them, so that's awesome. Come and check us out next. And of course, Melbourne trading event, 2nd of July, limited spots. Make sure to sign up if you can. And of course, that is a live event. So yeah, it's for the Australians, mostly in Melbourne, I guess. Thank you so much. And we look forward to bringing you more information over the next 24 hours. And boy, oh boy, do we need to be on top of this because, yeah, anything can happen in 2025. Bye for now, guys. Stay safe. See ya.